I know Burry and a few others are telling you that a crash is going to come, and we are going to have a dramatic pullback. Once again, recessions, pullbacks, drops are tremendous opportunities for those of us that are looking to be long-term investors. If you are not, it is the best time to get into the market if you have not executed. But the thing that you need to do and need to focus on is the number of shares that you hold. Long-term matters more than anything. For example, Microsoft all-time return, and I know long-term investing is not deemed to be sexy. All-time return, 277,500% return. Let me ask you, have you in your business, in any trade, any endeavor, gotten a 277,000% return on investment? Stock Club members, don't worry. I'm not going to give away the big secret that I gave away last week. But the longer you hold, the more money you stand to make once you put your money into a dominant company. That's the entire game. But guess what? Those that are at the top know that most people don't have the discipline to hold, to let this happen, because of the decisions that are made every single day and what are you intaking. So after this juice fast, there's a lot of clarity that I've had. And I've always said, ever since I cord cut in 2012, I don't have cravings because I'm not looking at Hardee's, McDonald's commercials, etc., Pizza Hut commercials, right? So, but that is a mechanism. Sales are a mechanism to take money out of your pockets and put them into the families of others. Who in here would love a 277% return? And I'll say this. Just because I'm telling you to hold for the long term does not mean that you can't peel off profit in the interim. Can I be honest with y'all? When I see that y'all don't want to hold long term, if I'm looking at you as a competitor, I'm looking at you like it's so easy to bust your ass in investing. Because if you cannot hold for a 2-year period, a 4-year period, you're saying to yourself, your ancestors, right? You're saying to your family that you don't deserve to be free because I want to live in the now. That's the entire game. Can you hold an asset for a long period of time? And there's ways that you can take profit, reinvest the profit, make the money back. It's not an all or nothing proposition. But anytime I say, oh, I want to hold for a year, that's not fun, I can't flip fast enough, and my eyes as a competitor, I'm like, great. It's easy to put up 96 points on you. You don't want to play any defense. Great. Here are the 4 reasons that I love Shopify and why they are one of the most dominant stocks for this decade. Number 1, I've already said it, Shopify is the new eBay for anybody that used eBay back in the day, and their executive team has done a better job at making their ecosystem a little bit better. But originally, the partnership that they had with PayPal was great because that will allow you to fulfill on the financial side if you have to pay or as a seller, right? But the experience was not the best. Shopify experience is amazing if you're on the business side of it. It's amazing for the customer, and I think that they are going to be the eBay of this era for the next 20 years. Number 2, it is in the top 15 of all stocks, in all stocks, not US stocks, of all stocks. They're a Canadian company and probably the most dominant company in Canada. The trailing 12 month is $3.5 billion. It's up 99.6%. So for a company for that size to make 3.5 and to be up 99.6 is amazing. Yes, it was because of COVID, but there are not many companies that had great traction beforehand and they're doing well after the fact. And then Shopify is up 5,056% all time. Over the next 10 years, I'm extrapolating and thinking that it could push up to 9,000% return since its IPO. And they're better than their competitors. So if you look at Wix, WooCommerce, any of the competitors that they have in the e-commerce space, they're a lot more user-friendly, easier to use. I'm telling you, Shopify is going to be one of the most dominant companies for the next 10 years. Next week, I'm going to give you guys a breakdown with one of the Red Panda Stock Club members, how he was able to take 27 grand and turn it into 100,000. Long-term investing only, right? No trades, no options, nothing, just long-term, which is 370% return. But one of the key lessons I can give you that you need to do today, you need to have a separate account for long-term investing. Once you put the money in there, Do not look at it for 3 months. Your long-term investment portfolio is not meant to be looked at. One of the major advantages that angels and venture capitalists have is that you have certain lockup periods. So if you look at what Tim Ferriss was able to do in that era when Gary Vee was investing in Facebook and he missed out on Uber, but he invested in some great companies. The lockup period for 5 years, it goes back to that 5-year equation again, right, is a thing of safety. If you have access to your capital and you can trade in and out of it, who does that benefit? That does not benefit you. That benefits others. That benefits the brokers. Put in chat, a 5-year lockup period is the ideal time to grow wealth. Here are the top 5 holdings of the Dow. Last week we talked about the S&P 500 and you're going to see a lot of correlations. But during any era you can look, the Dow, number 1, Apple, my baby. Thank you for all the great returns. I love you dearly. Microsoft, hey baby, you looking good. I love you. Microsoft is number 2. Number 3 is a sleeper, Visa. So I would say Visa is light fintech. When we talked about it, you compare the top 2 in their industry together and make your own micro ETF. So you compare Visa and Microsoft together, right? Kudos to my buddy Dave. I was telling Dave about Visa a few years ago and look how it's taken off. Matter of fact, let's go look at Visa's chart real quick. So if we look in 2016, it was at $75. Now, let me ask you a question. On your debit card or credit card, do you have at least one card with Visa on it? If so, put Visa in chat. And let's go look at the commentary. Had a tremendous run up. And look at all these green candles. This is forward momentum. So out of these 5 years, 1, 2, 3, 4 months have been bad. Let's count COVID and the recovery time. So if we take out COVID and what happened as a result, they've only had 1 bad month out of 60. Now let's go look at 10. So if we go prior to this, zoom in here. And this is when I do my analysis, what I'm looking for. So 1, 2, 3, 4, 5, 6, 7, 8. And so let's take out the 3 months for COVID. Only 5 months in which things were not great out of 10 years. Now, ladies, for those of you that have relationships or a husband, if out of 10 years, your husband only misbehaved in minor infractions, right? 5 times, how great would you be to him? I don't want a stock that is going to be volatile and going up and down all the time. This illustrates why. And then look at the price. 2011, the stock was at 19. It's at 238.63 now. The all-time high is 238.78. It'll break that and probably push to 251 within 14 months.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.